All right, so welcome to my January, first week of January trading wraps, which is going to be basically reviewing from Monday, the 5th of January to Monday, or let's say Friday, the 9th of January. Although we are also going to talk about a little bit of on Monday, today is currently the 12th, so let's see how it goes. So, throughout the course of last week, I took total of 9 trades, of which most of them resulted in TP being smashed. So for the first trade of the week was basically around 4 o'clock. So I saw this 1 hour fair value gap, although at that point in time we did not have any break of structure to the upside. But because of this impulsive move to the upside, I decided to look for some key confluences on my lower time frame, which is 5 minutes. So on looking at the 5 minutes, we had our break of structure right about here, our break of structure right about here, and I usually take trades off fair value gaps. So this fair value gap has already been tapped into, so I was expecting an inducement actually. So an inducement of this level. So this was the inducement I was expecting. So I placed my trade just right underneath that level and my stop loss at the swing low of the 5 minute move. So it ended up resulting in a quick 1 to 3 in the morning. Trade lasted for about 3 hours, 3 to 4 hours there or so. So after that, we had another entry point. The next entry point which we had was here. The next day on Tuesday, around 3:35 a.m. in the morning. That was the next trade we had. So we already had two consecutive breaks of structure, about three sets. All right, we had this one here, and lastly we had which is two, which is this one and this one. So I was about to take a trade from this consecutive break here. So let's see how it goes. So market first tapped into the fair value gap, which is basically internal liquidity, but I did not see like any good break of structure until this point in time, which market had already taken the liquidity off of this level. So and also the liquidity off of this level. So I was already expecting longs. Although there was a break of structure here, but I usually had this rule where I do not trade once it is past 8 o'clock. I've noticed that most entries during that time. Let's see, what session is 8 o'clock? Okay, which is late New York session and early Asian session. So I don't trade during that time because the market seems to be on a bit unstable during that particular period of time, which is from 8 to around 4 in the morning. I usually do not take any trades, or this one was taking around 3. So basically, I was actually hoping for a break of structure off of this impulse move here, but it ended up not breaking structure. So basically, we ended up coming back to this level. Now, I usually use the fibs to mark out my entry points. So I use the 50% levels of the Fibonacci. So this one at this 50% level right about here. That is exactly where my entry is on. So it took long for the trade to actually go through because it was from 3 a.m. in the morning till about 3 p.m. in the evening, so about 12 hours straight. And after that, we had this other trade which I took in between. So basically, if you notice, I marked out this fair value gap right about here. So I was actually expecting the market to move pretty quick. So I actually wanted to take another position off of the market. So basically, I had another trade off of this place, which you can see right here. But it ended up in an SL because the market was ranging a bit throughout on Tuesday. So it ended in SL. But later on, we actually had another fair value gap here, although the market had not broken structure at that time. But because of the impulsive buy moves, I was actually a bit skeptical. Plus, we had an inverse fair value gap here. So the market actually broke structure on the first trade there. The market broke structure on the first trade there, on the first impulse move there. So if we use fib, but we can see it did not get to our 50% retracement level. But this trade is exactly at our 50% retracement level. So the market later came back to our 50% retracement level later on. Although most of the time I put my trades a bit above the 50% retracement level, but this one I put it exactly at the 50% retracement level. So market later came back there, and most of my trades I target 1 to 3, but this one I put it here because there is no way I will see my trade falling back down. I will not leave it most of the time when it's already at 2 to 1 to 2. This is basically 1 to 3 already. So that's for that. Then the next trade was on Wednesday. The next trade was on Wednesday. So we had basically we had our first trade around 5:30 in the morning. So check the 1 hour time frame. So you can see, although the market had not broken any 1 hour structure yet, but based on this liquidity sweep and this level here that was broken, because this level actually created a fair value gap, of which if I see a level create a fair value gap, most of the time, if market disrespects that level, I usually would like to see shorts of it or longs of it, depending on which direction was disrespected. So basically, we had the fair value gap there, and I marked it out. So that was a bit skeptical, but I still placed a position there. So in this case, 5 minutes did not create any fair value gap. So what I did was that I hopped onto my 5 minute time frame, and basically this was 50% for the 5 minute time frame, but price ended up not coming to tap on that entry. It was later on. And I also have this rule whereby if price has already gotten to my TP, um, even though I already have a position, I just basically delete it. So that is why you can see I deleted this one. This one I deleted it on my MT5, but I left it here or did not extend it, but I basically did not delete this one, or I just extended it from where the original position was supposed to be. So after that, we had two fair value gaps here. So I was still following up. So this one now had a clear break of structure, which is off of this level. So we had two fair value gaps right there, of which market closed this one and then rejected off of this level. So basically, I counted this as a break of structure, and then there was only one fair value gap. So in case that in a scenario whereby there's only one fair value gap, I usually just take it immediately. I do not, you know, wait for. I don't wait for um 50%. I don't do 50% when there's only one fair value gap in a location. Then if there are no fair value gaps, I increase my time frame to a higher time frame, like the 15 minutes or the 30 minutes. So the next thing there we had let me see. So the next trade was taken day, the next day. So which was here. So the reason why this trade was taken was that basically we already had this level right here that I did not mark it out. I had this level right here, which market tapped into the previous day. So after being tapped into by the market, you see that there was actually no structure. It was just like an impulse move to the upside and then some slow selling went back up, did not break structure, then went back up. Now, since it was a bearish fair value gap, I was not really that into sales, so I was just, you know, still being optimistic about it. And then later on, remember I said I don't take trades from past eight, so even after this break of structure, I actually did not really consider taking any trades. So later on, wee hours of on Thursday, we had this break here. So basically, after seeing that break, I was like, okay. And now for this one, it's just a single fair value gap right here, basically. Just a single fair value gap. So for this one, let me, this one is like, fair value gap is very huge. So, okay, there's two fair value gaps, but I will not be counting that one as a fair value gap. So the fair value gap is very huge. So we have, it's about 59 to about 64. So that's about 50 pips. So what I do when the fair value gap is that huge is that I mostly shift my entry point to the top a little bit. So the reason why I put this one here is that if this fair value gap has already been tapped into before by this green candle right here. So I just put it a little bit at the top since I was expecting an inducement of that level. Then later on in the day, we had another break of structure to the downside. Now, basically, all this downside movement, the reason why I was expecting them is because of there was a daily fair value gap, which the daily level, let me just mark it out real quick. There was a daily level which I was expecting price to, run into. So you can see here, but most of the time I usually like to target the middle of the daily level, which is there. So basically, what I was targeting was that daily level. So we can see that the market broke structure again and then started going down. So let's see. So this was the trade, the last trade. So we see the fair value gap here, right about here, and then the market broke structure with this body right here. Now there's just a little, just a tiny fair value gap. So just a single one. So basically, I just placed my trade right about there, and then stop loss at this price point here, just a little bit above that high there. And my TP, since I was trading in profit, so I was just basically targeting my what I needed to pass the accounts. So that was what I was targeting, or else I would have targeted this liquidity below this sell stops, buy stops rather. So basically, you can see that the market tapped into the fair value gap. It went down. Just this period, I don't actually know. The market is going to give me heart attack. I don't really get. So the market went down almost to TP. It went back up. It was just like misbehaving, but well, I was courageous, so not close, but it was very terrifying experience. Not gonna lie. Then after that, market tapped into the fair value gap. You can see the reaction just seemed like a liquidity sweep, and we had this strong reaction to the upside. Remember, this is the middle of the fair value gap. So let me see if I can type some text here. I don't know what's wrong with my this add text. So you need to work this way. Okay. So after that strong rejection, we had two fair value gaps created, one here and one here. So let's see. So the first one was just basically closed by the market, and then we had another one right about here. So I have a rule that states that when retracing to a fair value gap, if the market creates um an opposing fair value gap, I usually do not take a trade except the market favors a particular bias from the higher time frame. So in this scenario, the market favors bullish bias because we already have massive rejection from a daily time frame fair value gap. So basically, market taps into this fair value gap here. Although it created bearish fair value gap. I ignored that because we had the higher time frame on our side. So basically, I was expecting the market to, you know, come back into this zone so that I can buy. This is my pre-construction right here, so that I can buy. But the market ended up not coming back to the zone and just went straight up and tapped my take profit. So basically, I did not take any trade on this level and I deleted it after tapping after I tapped the supposed take profits. So later on, the market came back to entry and still ended up going back to TP. But you know, I was already out. And this is on Friday. This is my NFT trade. So I was in the trade when NFT, although I think I closed before NFP. So my break even actually. So I was a bit scared NFP day. So I said I increased my break even on my NC5 by not doing anything on trading view. So basically, early in the morning, remember I said we already had this what they call it, this move right here. So there's this fair value gap, although there's a very fair value gap. But I remember I said because we have a higher time frame daily bias as bullish. I was ignoring that rule because of that. So we had this impulsive move to the upside. Price tap into our fair value gap. Did all he wants to do. Now, when price tap into the fair value gap, this was that mediocre reaction. And even if I wanted to take a trade from here, it will still go well because I think just that the stop loss would have been massive in a way. So 50% entering from here, stop loss here, 1 to 3, and we are gone. But this was like very early in the morning, and I usually like taking trades from around 4. So basically, I think I saw this position, but I did not take it because I usually go up around 420. So I saw this position, I did not take it. I was like, okay, let the market give me another bigger structure and the smaller one, and I'll take it from there. Since it was NFP, I just wanted to be cautious a little bit. But I wish I took it from here. Maybe perhaps maybe on NT5, I would not have actually taken that loss. But anyways, it is what it is. Sometimes you win some, sometimes you lose some. So basically, on NT5, on a trading view here, we had CP. So let's see. So basically, this is the breakout structure, and we had only one fair value gap. So this one I did not take it from my how will I put it, from my levels because actually I was like a bit skeptical. So I actually took it because I did not actually see when the market came down here. I actually had my trade position somewhere around here, but market came down here and I was like going inside my trade. So I just entered the trade somewhere around here, which was a huge mistake. But in either way, in this kind of scenario, my trade was supposed to be taken at the middle of this fair value gap. I was supposed to add these two fair value gaps together. So I'm still working on some tweaking the strategy a little bit. So I was supposed to add these two trades together, put my entry here, and then just let it run. But either ways, the mistake was already made. So I'm already working on that currently. So basically, what happened was that we had impulse move to the upside. I was like expecting it to go like that, but at the same time, pre I mean, is it yes, pre NFT market is usually very, very slow. So you get what you get in it. So basically we had this consolidation. So I think later on I put my TP my break even here, move my SL a bit higher here on MT5 and I got stopped out just before the NFP. So during the NFP, the NFP just swept its liquidity. Thank God it did not suit my trading view SL. So at least I know that my strategy was working. Just that I do not. I've said I will not be using break even, but I was just a little bit scared since it was NFP. The last account, which was last month December's NFP, that actually shot below my SL, and it was actually catastrophic. So I just decided to take some precautions. But anyway, I'm not supposed to be trading on NFT, but I just wanted to try something. I usually trade after NFP, so this was the after NFP trade. It was in the ninth, so but it was still before 8, around 8:50, just thereabouts. So I just use this one as my brick of structure, though it's not a brick of structure, not advisable to trade with that. But since I already had some news about gold going to go up, basically, so I just, took the trade from there. Um, it was around 850 thereabouts. So middle of the Fair Valley gap, since the only one is the only Fair Valley gap, I was supposed to take it from the top, but because it is very huge, it was about this is about 501, 94, 60, 70 pips. So basically, I put it in the middle of the fair value gap. I sell at this low and targeting 1 to 3. Most of my trades are always targeting a 1 to 3. And the first 5 minute candle of on Monday the 12th, which is today, was what triggered my TP. So that's it for last week's trading recap. So on Friday or next week, Monday, we'll be doing another trading recap for this week. This week is already in profits, lots of profits. So I'll be sharing that with you next week. So keep you guys updated. GG's.